There we go. Okay, cool. Please make sure. Oh, there we go. Mute everyone. Cool. Okay, so before we start, can anyone tell me what rate cuts are? Why are rate cuts implemented? What's the point of them? And yeah, let me know because the point is of this webinar is to essentially get you up to speed with what's going on in the markets. Why is the Fed cutting rates? What can we expect? And what is the plan going forwards? So I need to know where you guys are in terms of knowledge, and then obviously I can take it from there. If I don't get responses, then I'll just assume that it's very, very base level, and I will take it from a sort of beginner standpoint into more advanced. To slow down or support economy. Essentially, yes, although that is obviously a very blanket statement. So essentially, what rate cuts do is meet the current data within the economy, obviously. So the Fed can't come into the markets and say, okay, inflation's too high. So what we need to do is drop inflation. So for example, let's say inflation's at 5%. I'm not very good at drawing here. Let's say this is inflation. It's 5%. The Fed can't come in and say inflation's too high. We need to just drop it. So let's say now the inflation's now at 2%, which is the US target. That's what the Fed wants is 2%. They can't do that. They can't just change inflation with a drop of a hat or with an announcement. So what they need to do to control inflation is to essentially change interest rates. And that's what a cut or hike is. So when we see the Fed saying, okay, the Fed's dovish, or the Fed is hawkish, it means they are looking to hike or cut. So dovish, the way you can think of that is a dove flies low. So that means the Fed is looking to start cutting rates. If the Fed is hawkish, hawks fly high. So it means they're looking to start hiking rates. In this situation, they're looking to cut. And this one's a bit different, which is why I'm looking to make this a bit more clear for people, because the cuts we're seeing aren't necessarily because of inflation. Let me just change that. Here we go. So normally when we see a cut, it's because inflation's high. Inflation's low. So essentially, the Fed needs to keep inflation and interest rates aligned. They can't have super high interest rates and super low inflation, or vice versa. They need to be relatively the same. Well, not the same, but they need to be in line with each other. Um, so essentially, what we are seeing this time is inflation's actually quite stable. So I remember the US target or the Fed target for inflation is 2%. Now it's currently 2.5, which isn't too bad. That's not it's not anything to start sounding alarm bells at. However, if we then go look at where am I looking at? Retail sales, we can see real retail sales are doing okay. However, labor market is actually what's driving a lot of the Fed cuts that we're seeing. So you can see we were doing really, really well, NFP. So NFP is obviously very, very heavily related, or is essentially the labor market. We've basically dropped from 51K. I just realized my camera's freezing. Let me try and fix that real quick. There we go. So we had really strong NFP at the start of the year. So this was February. We had 517K. And essentially, we've just dropped off a cliff. And we did see last month a huge, I'm going to say shock. And the reason I'm saying shock is because it was revised this month. So last month's numbers were revised to 89K, which is double digits, which, it doesn't take a genius to work out the double digits for NFP is shocking. Um, and then this month, so September's NFP came out at 142. So we did have a drop. Now, 142, of course, is better than 89K that we saw last month. So we did see improvement, but relative to the larger scale and the larger outlook of the labor market in the US, very, very poor. Same with ADP. This is also double digits at 99. Unemployment claims actually relatively stable, which is a surprise. Job openings on a decline. Apologies about my camera. I don't know really why it's freezing here, but that's fine. Job openings on a decline. You can see right we are trending to the downside. We're seeing lower numbers and lower numbers. Unemployment rate is heading to the upside again. This month we did see a little pullback. I'm saying pullback. I'm not talking trade in terms, of course. I'm just talking loosely here, but we did see a lower number come out this month. So we came out at 4.2 from 4.25. So again, this was slightly stable, however, still not great. Now, I need to preface that the unemployment numbers we see here are still very, very low. So this 4.25, although relative to the data we do see, 4.25 isn't awful. However, obviously, things can start small and gradually snowball into getting bigger. So the sooner action is taken to combat these problems, the better. Guys, feel free to ask questions. I'm trying to make this as clear and sort of as understandable as possible. I understand that everyone's on different parts of the journey, so don't be embarrassed to ask questions. I don't want you to feel like I'm trying to be too advanced or even too basic. If you know, if you want deeper explanations, that's also fine. Wage growth is, of course, on the decline. We didn't actually see much movement here. We were relatively stable at the start of the year. However, towards the end of this year, we have started to see a decline again. However, this month, again, a slight pop here at 3.8, but still not great. So that's the labor market. Now, if we look at inflation, again, it's almost at Fed target. So this wouldn't necessarily be a red flag. So again, relating back, these cuts aren't necessarily inflation related. They're more geared towards the labor market. So that's something you need to keep in mind. Now, the DXY, what can we actually expect in terms of price movement? Now, this is obviously the important part. I know you guys probably don't care about the exact numbers and things. You more want to know, is the dollar going to drop? Is it going to rise? Is it going to range? What's it going to do? And it's not really as simple as giving you an answer because we have a range of outcomes. So, outcome one, let me draw these, write these up so you can sort of print screen them or visualize them however you want. So we have outcome one. So this would be a hold. So this is rate hold. Now, this would be a case where the Fed doesn't cut at all. Um, this is very unlikely. And the reason is because data isn't getting better. Now, again, we did see a slight movement this month of relatively better data, but it wasn't anything crazy. It's not necessarily too supportive. The grand scheme of things is still looking a little bit poor. So a rate hold, not likely. However, we do see a rate hold. What will the market do? If anyone can tell me, let me know. Let me just read this message from Adam. Um, Dollar has been in a range for the last 2 years, nearly a cut. Sorry, last 2 years nearly. A cut might actually push down the DXY to a new range break. Yes, Adam, we will get there. Not far off. I tend to generally agree. So rate hold. What happens here? Well, the dollar will be bullish. And the reason is because let me find my arrow. Not sure where that's hidden. Just give me 1 second. I need the path arrow here. So essentially what we saw was since June, so the end of June, we've just seen the dollar decline, and this decline was roughly 5% from what I remember. Yeah, over 5% downside movement on the dollar. So this downside movement was driven by two things. Some of you may remember that we had a very, very aggressive and very, very quick risk off market. And you can see that on the yen. Let me get rid of this arrow for a second. So this this risk off move we saw really did not help the dollar, and that contributed quite heavily towards this downside movement that we did see. But also, it's not just that. We saw this downside movement mainly driven because of the Fed cut. So there's a lot of pricing in. So essentially, if we don't get this rate cut that the markets expect, there'll be a lot of closing positions and adding in new positions into the markets. And essentially, that will be bullish for the dollar. So obviously, people are selling, anticipating cuts, and that cut doesn't happen. Investors will be disappointed, close out positions, and maybe start reversing their positions, and that will cause the dollar to start turning to the upside. Outcome two is the rate cut. So if we get the rate cut, it could be one of two options. We could get a 25 basis point cut, which is what I favor. That's where I'm sort of residing at the moment. And let me actually just pull this up for you. So this is the CME FedWatch tool. So what this does is this tells us essentially the probability for the FOMC meeting. This gathers information from the market, well, sorry, the market participants, and says, okay, what do you expect the market to do, or what do you expect the Fed to do? Sorry, and it will tell us. This camera is really annoying. Keeps bleeping. Um, Try and fix that and put it over here. There we go. That might help. I don't know. So essentially, this has been playing around for quite a while. This was, you can see 1 month ago, this is only a 25% probability of a 50 basis point cut. Now it's risen to 50. So essentially, we've got market participants unsure. There's a lot of uncertainty in the market at the moment. And this is what's sort of driven this recent movement that we've seen on the dollar, this sort of sideways range. It's people, what's the Fed doing? No one knows yet. So they can't really get into too many positions. So again, with a 25 basis point cut, I wouldn't anticipate anything. I think this will be a very muted move in the short term. So essentially, what I mean by that is the dollar might not actually do anything because this is expected. 25 basis points isn't going to be, oh my God, no one expected it. It's going to be a shock to the market, or it's not going to be a wow, amazing. It's just, it is what it is. Everyone expected it. It's already priced in. Nothing's really going to change. So if we do see 25, which again is where I'm sat, let me change this to outcome 2. And then outcome 3, of course, is the 50 basis point cut. This is where things get a little bit more concerning if we do see a 50 cut. Um, the reason is because 50 would be a very, very aggressive rate cut from the Fed. Now, it's not just the amount that they're cutting, it's what that amount signals. It's a case of if we do see a 50 basis point cut, it's a sign of, yes, a lot of market participants were right that the Fed should have cut in July and they are late. And that can also be called the Fed, sorry, the name of that is sort of the Fed is behind the curve. And what that means essentially is the Fed is way too late into cutting rates. They missed the opportunity to fix the issues that they're trying to fix by cutting. Um, and this can signal that we might be heading, or the US might be heading into a recession. So we do see a 50 basis point cut. We are likely to see very aggressive moves to the downside and very sharp movements. So you need to be very cautious and you need to listen to this. If you are in any dollar positions, if you see a rate hold or a rate cut of 50, you need to be on top of your management and you need to be very, very vigilant, essentially. So for example, let's put this into terms. Let's say you are dollar bullish. Let's say you're in a euro dollar sell. So you need the dollar to go up and it comes out of again, let me just change this here to outcome 3. So if you see outcome 3, you're going to be in trouble because the dollar is going to dump off a cliff. Now, if you see outcome 1 where we hold rates, then again, your dollar bullish scenario will be quite good. Let me just read this message from Adam. Is it possible a dollar might have a rally if we see 25 basis point cut instead of 50? I've seen a lot of banks saying 50 is priced in. Yes, Adam, this is another thing I was going to get to. You are right. Outcome 2 is a little bit tricky to gauge because we could see what I spoke about before with this range and then a slow move to the downside. Or we could see some slight pullbacks as 50 gets priced out and 25 gets repriced in. And that would be still a relatively bearish case for the dollar, but not as aggressive by any means as a 50 basis point cut. So does this make sense so far, guys? I need some feedback just to make sure that you guys are understanding, you're following along. Make sure I'm making sense, of course, because the whole point of this is, of course, this is a free webinar. I sent it out to as many people as I could. So as long as you guys get some value from this, then my job is going so well. Great stuff. Cool. Okay, so what I'm going to do is run through some positions that I'm in that we've sent to the Discord to essentially try and hedge ourselves into the FOMC. And I'm going to explain it as clearly as possible. So this camera, I apologize, guys. I don't know why it's doing this. So what we're doing is we are in euro dollar shorts. Now, I'm not going to go through the exact reason because it's quite long and there's lots of unrelated information to the FOMC here. But one of the things we knew Credit Agricole was in short positions. That was a great trigger. However, one of the big factors, of course, is FOMC. And we say, okay, well, I'm personally on the side of a 25 basis point cut, not a 50. But, and the big but here is I don't know. No one knows for a fact if it's going to be 25 or 50. So what I've done to mitigate some risk on the dollar is gone short on US dollar CAD. So again, I'm going to explain this in quite simple terms. So if you are more of a knowledgeable trader, then I apologize. This bit may be a bit boring, but there you go. Got to cater and try and make it understandable. So we are long on the dollar CAD. So essentially, we're buying the dollar and we're selling the CAD. Whereas euro dollar, we are buying the euro and selling the dollar or the US dollar. So we're in both ways. So we're buying and selling at the same time. Now I'm going to go on a little side note here on some hedging and sort of portfolio management bits. So can anyone tell me why oh, sorry. Can anyone tell me what we can do to mitigate risk even further here relating to dollar CAD? I'll give you guys a minute. This isn't a trick question, by the way. There is an answer, and I'll give it in a second. I'm just going to catch up on the chat. What's your news source? I'll go over some news sources and things closer to the end, and then you guys can keep up with yourselves and things, so you don't need to rely on me or anything. Uh, yes, makes sense. So the dollar is going to move either way. Yes, and B, yes, you're absolutely correct. It's oil. So what we can do is look to go short on oil, and this is one I'm not in it yet. Just to be clear, I am looking and I'm waiting to get in. So what I want to do is sell oil. So if we look again, buying the dollar down here, we're selling the dollar here. Now, personally, I'm bearish on the euro, but again, that's a different topic I won't go into here. So I'm quite happy to just sell the euro, happy to be flat on that. Now, again, risk on the dollar is mitigated. So the only thing left here is the Canadian dollar. And for anyone that knows the markets or knows or understands correlation, you will know that the oil market, sorry, the crude oil market heavily drives the price of the Canadian dollar. So if we're buying the Canadian dollar, we then need to go and sell it by proxy by selling the oil markets. So that's how I'm personally hedged. Now, you obviously don't need to follow that. I actually wouldn't advise to follow that. In fact, I actually can't advise anything. I'm not qualified to do that. But um, I just wanted to explain that so it's clear and you guys can sort of understand how you can get into these positions. Now, it's likely I will take a loss on one of these. Which one? I don't know. It could be the Canadian dollar and oil. I might take a larger loss than I want to. However, the plan, of course, as always, is to win more than I lose here on one of these positions. We've also got CAD CPI. That's true. But to be honest, it's fine. Again, looking to hedge CAD, so not an issue. Let me just think if there's anything else. I've made some notes here, so let me just have a quick look to make sure I've not missed anything that I should be bringing up for you. I guess we can go over some markets. What will happen to individual markets? So separate from the dollar necessarily. So we can have a look at gold. Now, gold's quite interesting because we've seen a huge rally this year on gold. It's up over 20% actually since January. Where is January here? So we're up, yeah, almost 30% roughly on gold. Um, Recently, there are other factors for gold, of course. There are things like tensions in the Middle East. There was Russia, Ukraine. There's other things in play. There's also the US elections in November. However, a lot of this was also driven by rate cuts. So, of course, people selling the dollar, moving capital into safe haven assets like gold. So, if we do get the rate cut of 50, what can we expect on gold? Uh, Need my trusty arrow back. Well, we will see gold sharply run to the upside like a rocket. And that again will be selling of the dollar, buying of gold. However, if we do see the 25 basis point cut, I actually do anticipate a move to the downside on gold, and that will be mainly profit taking as investors get a little bit, um, maybe not disappointed, but more not as fearful. So they don't need to necessarily be in these safe havens because 25 isn't urgent. It's not a huge red flag. It's more of just who cares, 25, it's expected. It's already priced in. Um, how much percentage do you risk per trade? I risk anywhere between sort of zero point 0.5 and 2%. It really depends. I like to be very aggressive with trade management and exposure. So, for example, if I already have positions on a lot of the commodities markets, I won't really like to risk too much more on the commodity. So, for example, if I'm long on platinum, long on gold, long on silver, I might reduce risk on those to maybe 0.5% each. Whereas if I'm in just one position, whether it's euro dollar, pound dollar, whatever it might be, then it's probably just a flat 2% risk. Um, but yeah, there you go. So, um, again, any questions, feel free to send them through. Let me just again check here. Oh yeah, the individual markets. So it'll be a very similar thing on the indices. So what we can do is actually discuss a little bit how do interest rates. So of course that's what rate cuts are. Is it's the interest rates. Are they getting cut or hiked? In this case, interest rates get cut. So what do we expect to happen to the indices? Well, actually, the best one really to look at is the Russell. So the Russell is a smaller company. So you've got the S&P 500, you've got NASDAQ, which are obviously large cap companies. Whereas the Russell 2000 is smaller companies. So what we can do is say if rate cuts are going down, again, let me find brush. So if rate cuts are coming, sorry, if, interest rates are coming down, what does that mean? Interest rates are essentially, if you go and buy a house, your interest rate can go down. If you borrow money from the bank, the interest will go down. So that makes it easier and more efficient to borrow money. So these smaller companies that do borrow more money. So if you look at someone like Apple or Microsoft, they don't necessarily need to borrow money because they have large sort of piles of cash essentially to dip into. Whereas your smaller companies don't necessarily have that. They will rely on loans a lot more from the banks. So if we expect a larger rate cut on the US dollar, that means it's better and it's easier for these smaller companies to borrow money, which obviously stimulates them into having essentially more value. Obviously, in theory, it depends what they do with that money, but there you go. Um, so let me just read this message here. Oil wouldn't make sense to go short at this price. It goes against the favor of the Saudi oil industry, aka OPEC. They need more expensive oil to fund their business projects. On the trading side, it's lower end of a multi-year range as well. We had storms in the Gulf. Yes. So Adam, essentially, yeah, you are right. The oil is very, very cheap. It's actually too cheap. However, again, I'm looking to mitigate risk. I'm not necessarily selling oil to make a profit. It's more just to lower my risk exposure in the markets into FOMC. And oil is actually not necessarily doing too hot. Yes, there are OPEC that want oil prices to be up, um, but OPEC's not the only deciding factor for oil. There are other things. However, we'll get back onto topic. So yes, essentially, what rate cuts do is it makes it better or easier, more efficient for companies to borrow money. So essentially, that would be good for the indices. Obviously, you would expect a larger reaction of the RTY, which is the Russell 2000, which is smaller companies. However, generally speaking, you will start to see NASDAQ and the S&P do better. If there's no rate cut, yeah, if there's no rate cut, we will see these markets start to decline in value. So we'll start to see more downside movements here. 25 basis point cut, again, similar to the dollar, more of a maybe a slight turn to the downside and a range, and then maybe some slight upside, but not really expect, don't really expect much from a 25 basis point cut. Hello. Uh, Even if we get 25 basis, sorry, even if we get 25, is it still bullish for them or a little disappointment turn to the downside? Yeah, it's still on surface level, yes, it's still bullish, but it's not as bullish as a 50 basis point cut, of course. Um, so yeah, if we do get 25, I'd be more sat on the sidelines. I don't really care about that. I wouldn't expect too much from 25. Overall, generally speaking, probably a slight range on the dollar, move to the downside on the indices, so like NASDAQ, S&P, RTY. You'd see a slight range and then maybe a slower move to the upside, but it wouldn't be as aggressive as a 50. So I think actually, that's about it that I have to cover. Again, if there is any questions, let me know. I will get to I'll get some news sources and things that you guys can follow. So you can stay up to date. Let me just check my notes really quickly here. Um, would you wait to post rate cut or pre-rate cut to open your position? Adam, I'm already in my positions. I've been in them for a while now, since I think it was early last week. Generally speaking, I wouldn't get into a position now. I'm more waiting for these positions. I'm happy to watch what happens, because I'm quite diversified. I'm not too bothered really. Would you say retail sales on Tuesday will be a determining factor? It won't be a determining factor for the Fed, I don't think. I would use it as more of a signal. If we get really poor retail sales, then yes, it might signal that we would see it more of a 50. But yeah, we'll see. I'm not. So something we need to understand is the Fed's last speech gave away basically no signals. I mean, it was quite dovish, but it wasn't oh, we are going to cut 50, we are going to cut 25. It was more of essentially what they said was we're going to take it by a incoming data basis. So what they want to do is see what data is coming into the US, what does unemployment look like, what do retail sales look like, what does CPI look like, and then they'll make the decision based off that. So yeah, the data we still get will still influence the decision. Sir, please provide your WhatsApp number. My WhatsApp number is on the website, but I guess I can give it here. Oh, there you go. Oops, I sent that to the wrong person. I put that to Jacob. Sorry, Jacob. One second, let me rewrite it. There you go. Please don't spam me with shit. I'm a busy person. I don't want to get stupid messages, so only contact me if you've got actual questions or something. So let me again just quickly check here. Yeah, okay. So what we're going to do is quickly have a look at what you can use as news sources. So what do I use? Well, I use a few different things. So I've got the prime market terminal here. So again, we can see the rate cut probability by the Federal Reserve Bank. So we can see the next expected move is a cut. The probability is 53, the current rate, the change, and when the next meeting is. And then we can see here it's very similar to the CME FedWatch tool that I showed you earlier, which is this. You can also use, well, this is free. So what I'll do is I'll put this in the chat for you. So you could check this anytime. Again, it's free, but it's good to keep an eye on. I mean, this will probably change quite quickly next week as we go through the week. So I would check this on maybe in the mornings and at night just to keep an eye on it. But overall, it doesn't matter. It's not really going to change too much in terms of like what the Fed actually does. But you can get a better understanding of what you could expect. There is also the Edge Finder, but again, that's not free. So you can use Reuters. So Reuters is free. You can use FX Street. This is free. You can use CME, which I've already sent, which is free. TradingEconomics.com is free. Bloomberg, you can get some things for free, I think, but I pay for that. Financial Juice, this one is also really good. This is free. So what this is essentially a free news flow. So you can see everything that's coming out in real time. I don't think you'll see anything today because it's Sunday evening, but when the markets are open, you'll see a flow of news here. I think you can make an account, or you should make an account, but it is free. It doesn't actually cost anything. Um, and then you've got investing.com and bar charts, but that's about it in terms of news sources. There's a lot out there. You don't need to pay for things. I do because it just makes my job easier. But yeah, overall, you don't need to pay for anything. Um, So, is there any questions? If not, then we can call it a day here. I hope I've tried. Yeah, well, I've tried to make things clear. I'm not a teacher by any means. I am more of a trader that happens to be on social media and things. So, um, Bank of England may be quite hawkish. Do you trade GBP this week? I'm not in the GBP. I'm not taking any more trades this week. I want to see what the markets are going to do, and then I will be sat on the sidelines until we get that result. So again, feel free to ask any final questions. I think I've covered everything. One last question. What made you open your positions prior to the week's meeting? I'll tell you what I'll do is I will cover this for you just before we go. So if we go to the Elite Trader site, and I'll provide this for you for free. So I'll put this link here. There is a password, and this is because it's normally for members only. But because you guys took time out of your day to be here, I'll give you this for free. It's 1 second. So the password for this website is, I've lost the chat. Where's my chat box gone? Ah, here. So the password is this. It changes every day. So if you want to make notes, you need to do it today or tonight, whatever time zone you're in. But essentially, what we see here is all the information that I basically get, whether it's from bank reports or anything else. I aggregate it for our members, put it into his website, or onto our website, and they can use it. We also provide these, which are trade ideas, essentially. And this is all just based off economics. This isn't signals or anything. Obviously, if we take the trade, we send it as a signal, it's separate. But you can see here again, I'm not going to read all this out, but feel free to print screen it or read it, whatever. But this is essentially the reason. So to answer your question, sorry, there's a little bit of a bypass there, but or a side note. But to answer your question, euro dollar I really liked, regardless of the Fed cuts. I'm bearish on the euro. I don't think the euro has any more steam left inside it. The data coming out for Germany and Eurozone in general is pretty poor. Again, Credit Agricole is short. I was already looking at this market. So when I saw that institution was short as well, I was like, okay, that's a good confirmation to get in. So I executed. Now, then the point from this position was saying, okay, well, we do have these rate cuts coming. I don't want full exposure to the dollar. What do I do? Well, I need to buy the dollar. Sorry, I need to sell the dollar. So that's how the US dollar the US dollar CAD position came about. And this one is purely based off technicals. So if we draw, we draw the fib from low to high, which is right here. We also have this level of structure. So it's a very, very simple trade. There's nothing complex behind about this trade. So again, we've had the 50% pullback of this move, showing slight rejection of this previous level. So a very simple sort of break and retest looking trade. So I was very happy to sort of counter those positions like that. Shavim, why are you trying to sell gold? Oops, let me put this here. Why are you trying to sell gold here? I know you're in a buy, but what's the point? Are you trying to hedge? If you are trying to hedge, you've probably not gone about it the correct way, which is fine. I understand people have learning processes and things, but that's a dangerous game to try and sell gold in this market. Um, yeah, not not necessarily the best idea right now. You might be able to catch something here, but yeah, you'd be lucky. So anyway, again, I think we might be at the end here. I have covered three outcomes, which are kind of the three only outcomes we will see. So we've got a rate hold, which is very, very unlikely. We've got a rate cut of 25, which is what I expect. And then we've got rate cut of 50, which would be very aggressive. And this would be the big red flag, essentially. This would be a case of get out of dollar longs. We are heading to the downside, and we're going to do it with or without you. Um, so, guys, I'm just going to do a quick little shout out here. If you want to join our Discord, if you're not already in it, feel free to join it. You can get the first month for only $10. And there's a code here. There you go. But that's it. I yeah, can't think of anything else in terms of what you need to know going into the cuts. Again, feel free to use those news sources. They are free. Um, so stay up to date. Of course, if you follow our socials, you're in our Telegram or our Instagram broadcast, all of that stuff in our Discord, whatever. We'll of course keep you updated. But yeah, other than that, have a great night. Have a great trading week. Don't blow your accounts. Don't get into stupid positions because you could get chopped up very quickly. Um, and I will see you guys later. Thank you for watching. Again, enjoy your weeks.